the Global Value Fund is a differentiated strategy. You know, we're not stock pickers. Instead, our core skill set is this ability to kind of go around the world looking for essentially assets that are trading at a distressed level, or a discount is what we like to call it. And then what we do is, using a variety of hands-on techniques, we look to extract the discount from those discounted assets that we've purchased. One of the most easily recognizable of those tools would be shareholder activism, for example. But there's many other ways that we do it: corporate actions, various other things. Our stated aim is to target global share market-like returns, but to do so with that much lower risk profile than a traditional basket of shares. And then everyone always says to me, well, that sounds awesome, but how do you do that? Well, the way I like to kind of describe it is that we look to provide investors with two sources of returns. First, there's the returns that we generate from purchasing all those assets at a discount. So those assets will produce various returns, and that's the first kind of pool of returns that we get. And then secondly, we strap on top all of the returns that we make unlocking the discount that we purchase those assets at. So just to break it down kind of granularly, we IPO'd 9 years ago at $1. We've annualized at just shy of 11% per annum after all fees and expenses. We're currently paying a grossed up yield of over 8%. And we've not had a down year in those 9 years, which we're very proud of. Touch wood, touch wood, touch wood, sorry, touch wood. Anyway, so I was talking about how we get those returns. So the first source of returns, those assets, what you'll see here is we're only ever partly invested in listed shares. We'll then have a variety of other assets. So we'll have bonds, we'll have listed private equity, a huge kind of diversified pool of assets that we've purchased all around the world. And then by investing globally, we end up holding a basket of currencies. And again, the entire philosophy with the currencies is to drive down our risk by holding a kind of a pool of currencies that largely reflects the global investable universe. Now, the returns that we get from these two sources, so the assets there on the left-hand side and the currencies, they make up that first source of return. If I'm to describe it or if I was to put it out in graphical form, and I was to attribute out GVF's returns. So by attribute, I mean attribute out what we've made in the underlying assets, what we've made in the underlying currencies, and then show you what we've made in the discount capture. This is how it would look. This first wave here is the underlying assets that we've purchased all around the world. So we purchased these assets, very diversified, unique, conservative basket of assets, and this is roughly what they've done in the 9 years since we IPO'd. Then we've got the currencies, so that's the currencies that we've held through that same time. And as you can see, the combination of these two together has produced a low rate of return of around 6% per annum. And that's what we would expect. A hugely diversified portfolio of assets and currencies should produce a kind of a low rate of return. And that has produced that 6%. The way we have achieved the 10.8% after all fees and expenses is we've strapped on top the discounts that we've purchased those assets at, and we've released those discounts into this part of the chart, which is what we often refer to as the kind of the alpha of the strategy. Today, that's just a quick summary of GVF and how we get to do what we do. But today, I wanted just to spend a little bit of time talking about a theme that I've started to notice within the firm and that I wanted to share with you guys because, I mean, I don't know about you, but it does feel as though we have a plethora of bad news constantly heading our way, whether it's wars or the cost of living crisis. It's immense. And I wanted to kind of give you some positive feedback that I'm seeing within the team. As Miles said, we both run Stouty Capital together, the manager of the fund. We run and own it together. And in particular, in the last 3 years, we've done quite well, and we've invested a huge amount of that into the business. We hired Mark Ambrose in March 2020. He has been a fantastic hire. He is essentially now the co-portfolio manager with Miles. He is based in London. The majority of our team is in London, and he's worked out very well. We've got a young analyst who also joined us in April last year. He is an Oxford graduate with a maths degree. He's also working out very well. And then together with James, so there's 4 investment managers in the team, which again is a lot of investment managers for the amount of assets that we run, but we like it that way, and that's how we find these really exciting and interesting trades. It's a very strong team, and I think that we're starting to see that in the returns and how things are panning out. On the operations side, we've hired Debbie Tanner, who is heading up the compliance and operations. We've invited Debbie Tanner and Mark Ambrose to join the Saudi Capital board as well. So, a lot of more diversification across the board. We've been working with a computer programmer for the last 2 years in the business, optimizing the systems within GVF and making sure that we can seamlessly work between London and Australia. Miles and I moved back in November last year. We've now set up an office in Australia, and that is allowing us, or will allow us, to focus more of our time on the Asian opportunities that we know are there, and that we've always we've done quite a few Asian trades in the past, but it is quite difficult to run campaigns from London and the Asian time zone. So from here, we'll spend a bit more time doing that. And I think for me, this investment into the business has done 2 things really. It's freed Miles and I up tremendously to focus on what I think we're quite good at. For you, Miles has focused on the portfolio, spending more of his time and energy with the guys, going through the trades that we're looking at. And for me, it will allow me to focus more on strategy and spending time with our investors, which I'm very excited about. Secondly, and without wanting to tempt fate again, I do think it coincides with quite a good period of performance. And I just wanted to kind of prove my thesis by showing you a graph here. What I'm doing is I'm showing the last 3 financial years, so FY2, 21, 22, 23, and then FY24 to the end of September. And I'm charting, first of all, I'm charting global shares. So in Australian dollar terms, this is what global shares have done over that period. If you're looking for the bar chart for FY24, unfortunately, global shares are at 0 year to date. I've then charted global bonds. You'll remember, hopefully, from the pie chart earlier that in general, well, actually, consistently since our IPO, our 2 biggest exposures, if you like, to assets has been global shares and global bonds. And so I'm showing global bonds here. And then I'm showing just a picture of half and half, so half global shares, half global bonds. And then last but not least, I'm showing GVF and what we've managed to do over those time frames. 21, fantastic year for us. For us to outperform global shares with the lower risk profile that we run with was just really fantastic, and we were very chuffed with that. But funnily enough, we were almost as chuffed with 22, because when asset classes everywhere were down, and you can see major indices here being down that much, is a sign of, small caps, the FANG stocks would be down so much more. GVF managed to produce a positive return, which we were very chuffed with. FY23, we saw another kind of return to 20% for global equities, 5% for global bonds. But again, GVF produced 15.5% in that year, which again, for the risk profile that we were running with, is something that we're very chuffed with. And then for FY24, look, who knows where we're going to end up, but we're off to a good start. And if I'm right about this theme of hitting our stride, I am feeling a little bit positive about what might come for us in FY24. So that was my theme today. I will have one more slide from me, and you guys would have seen this slide, but a lot of you would have seen this slide before. Miles and I always fight over the slide, so I've agreed.
He gets to present to it.
Exactly. I've agreed to put it in between the two of us talking, so he can say a few words too. But I just love this graph because if there's one thing that you take away from the presentation today, I'm hoping it's this graph. It shows the profit or loss, profit on the left-hand side here, or losses on the right-hand side of every single trade that GVF has ever done. It's worth clarifying that some of these bars are multiple trades in the same name, for example, in the same investment. And hopefully what it's showing is the skew that when we make money for investors, we make money. And when we lose money, which is inevitable with all investing, we don't tend to lose a huge amount. And that comes down to that margin of safety, the discounts that we buy these assets at.